The latest job numbers are out, and they show a big disparity between men and women in the workforce. 10 million more men are employed than women, and 17 million fewer women are in the labor force than men overall. We want to bring in Pipeline Equity CEO Katica Roy joining us now in studio. Katica, it's great to have you here in the studio for the first time in quite some time. 390,000 women, though, in this report we just got out this morning, leaving the labor force last month. And you and I have talked a number of times just about women staying out of the workforce. Now we have even more women leaving. Why do you think this is?
Well, there's a couple of reasons. One is that as we see fewer jobs, right, women tend to be the last hired and the first fired. That's certainly part of what's happening. Mm-hmm. The other piece is digital acceleration. So the jobs that existed at the beginning of the pandemic don't exist, not necessarily exist right now. So we need to actually skill women into the jobs that are available.
So Katica, then how do we get women to get into the jobs that are now available? How do we sort of connect those dots?
Yeah, there's really two pieces. One is this equitable skilling, which has two focuses. One is actually having women have access to skilling opportunities. So for instance, in the infrastructure bill, 100% of those jobs need skilling. So that's one opportunity. But the other is actually ensuring that women have the equity of opportunity to apply those skills. Because we know, for instance, in STEM, that half of all women will actually leave in the first 10 years in STEM.
And Katica, right now we're in a time of high inflation. The Fed has gotten very aggressive. You're digging down and telling us that rate hikes actually affect women more than men. How so?
Well, there's two pieces. So we know, for instance, the inflation rate for goods and services that are targeted toward women are double that for goods and services targeted toward men. But the other thing is that as the Fed raises rates, it's actually a higher credit risk to be a woman. So we get charged higher rates for mortgages and car loans.
So right now, as we hear, the Fed is going to continue to remain very hawkish, potentially weakening the economy. Right now, we have 1.5 million women that still haven't returned to the workforce. What do you think that number will look like 6 to 8 months from now?
That's a great question. I don't actually know, but what I know is that it will likely get worse before it gets better. And one of the things that's really unfortunate about what the Fed is doing is that it's actually harming women. If we brought those 1.5 million women back into the labor force, we could actually close the gap between the number of jobs open and the number of people looking for jobs by almost 35%. Mm-hmm. That would cool the economy so that we don't have to continue to raise rates.
And Katica, you've talked about the Fed considering women when they look at this picture of full employment. What do you think they're missing in the picture right now?
They're not looking at it through an intersectional gender equity lens. So they're not looking at it through the lens of gender plus race and ethnicity. So for instance, we talked about the 1.5 million women that are missing from the labor force. If you look at that through intersectional gender equity, so specifically for Black women and Latinas, Black women are currently at over 8% unemployment since the beginning of the pandemic, and Latinas are a little bit over 6%. So they have not reached full employment. If we actually put policies in place to increase their employment and their participation in the labor force, we will cool the economy.
And Katica, when you take a look at the breakdown of minimum wage workers between men and women, how does that stack up? And I guess how does that compare to what we saw pre-pandemic?
Well, women are the majority of all minimum wage workers in the United States. It's about 56%. One of the real concerns is that this year the wage gap has actually widened for almost every woman. So it's 5 to 11 cents. That's on top of inflation-adjusted wages. We're actually earning less. And so not only do women have less money coming into their wallets, they actually have more money coming out.
So then, Katica, for some of these companies who are looking at this and thinking, what is the business case for hiring more women, whether it affects their bottom line or how it affects the economy? How do you convince them that it's not just a nice to have, but also smart business as well?
Well, that's, Pipeline started with research. We did a research study across 4,000 companies in 29 countries. And what we found was that for every 10% increase in intersectional gender equity, there's a 1 to 2% increase in revenue. Here's what's interesting about that. As we're looking at the softening of the economy, the return for investing in equity during a downturn is actually double. So right now, companies should be doubling down on ensuring equity in their labor force, and not just hiring and not only pay, but things like performance, potential, and development.
Very important message for everyone involved, especially for those companies that are hiring right now. Katica Roy, great to have you. Thanks so much for joining us in studio.
Thank you for having me.